Hello and welcome. Top news at this hour. You've got HDFC Bank, which has come out with numbers 32,615 crore versus that ET Now poll of 32,900 crore in terms of the net interest income. You look at the operating profit as well, largely in line, maybe a couple of percent here or there where the operating profit is concerned. Some of that may be impact also of other income, and profitability is completely in line with expectations. 18,654 is that profit after tax number on a standalone basis, and of course on a very, very low base it's a decent growth, which is around 12% YOY, but even QOQ it's a decent growth number in that sense. Around 2.8% odd QOQ is what we've seen that growth come in. I'm curious to know what the EPS number is, and I'm just going to pull that out in a minute. But while we are at that, let me go across. We also are joined in by Aditya Shah, who is founder at Hercules Advisors. And we are also joined in by Gaurang Shah, Senior Vice President, Geojit Investments. Aditya, let me come to you first. How are you looking at the numbers for HDFC? No disappointment per se. Provisioning is low on low base as one would expect in Q3. Given that Q1, Q2 is generally a seasonality hit which HDFC takes, Q3 is benign in that sense. It all looks good overall in terms of the numbers.
Good afternoon, Harsh. Steady numbers from HDFC Bank. Advances grew at about 11%. The deposits grew at about 9%. The asset quality, which is one of the major factors for a bank, was at 1.24% of gross NPAs, which is exactly as it was in the last quarter. It was down from 1.42% to about 1.24%. So from my perspective, asset quality also continues to remain really very stable. Nothing to complain about there. I don't think there has been an improvement in the NIM. That is something that I will watch as the presentation comes in. What is the NIM, which is the key parameter now, where the key improvement needs to happen for HDFC Bank. But net, very stable set of results. Nothing on the upside, nothing on the downside. Stable as well.
I reckon that NIM number hasn't seen a lift this quarter either. So it's probably another quarter where we'll have to wait and watch as to whether that margin number can get a lift. Of course, we have to still wait for that margin number. Gaurang, your first take very quickly with regard to HDFC's numbers before I ask you specific questions.
Hi, Harsh. Good afternoon to you.
Very good afternoon. Gaurang, please go ahead.
Whatever we've seen in terms of the numbers, whatever is reflected in front of us. 473 branches I saw a flash sometime back in terms of new branches opening. I think that should possibly add to the contribution to the balance sheet as we go forward. And my sense is that with the kind of interest rate cuts we had last year, 1.25%, believe April new financial year, April onwards, you might see another start of maybe a slight rate cut in terms of interest rates. But nothing to complain as far as the numbers are concerned. I think definitely in line and no disappointment.
Gaurang, what do you make of the move on HDFC banks in the start of this year or the start of this month? We've seen a 6% correction in the stock price. Would you reckon that there's been some bit of negativity which has built up, and maybe these numbers should settle any negativity that could have been built up, and therefore you could well see a positive move on the stock price on Monday?
As you know, I don't comment on short terms, right?
Sure.
But let me say this, Harsh.
Yeah.
This should soothe the sentiments, right? And the fact of the matter is that, FIs have a large investment in large cap stocks, as we all know, Harsh. And the way they've been selling since October of 24 onwards last year and beginning of this year, the first casualty that you will see is the frontline names like HDFC, like Reliance, like L&T, likewise others. So no surprising with the kind of correction that we've seen. Of course, in terms of last 3 to 6 months, if you actually go to see Harsh, has not contributed in any way whatsoever. But I think these numbers should possibly soothe the sentiments. As a disclosure, again, a small disclosure, Harsh, because we are talking about HDFC Bank. Our fundamental research team has a positive coverage. Our company, Jyojit or myself, do not have any personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. And my sense, Harsh, is that the entire BFSI segment looks a bright spot amongst the crowd.
Excellent. What's the target price you have on this one, Gaurang?
Well, up until now, keeping in mind second one, because numbers are just out, fundamentally need some time to break it up. But we are working with a target of somewhere close to about approximately, Harsh, this is an approximate 1100 to 1150 or thereabouts.
Got it. Okay, excellent. Aditya, let me come back to you on that margin number because we spoke about that. By the way, also joined by Avinash Gorakshakar, Head of Research at Profitmart Securities, joining us. Avinash, I'll come to you in just a minute. Aditya, with regard to margins, how have you viewed that number? Because, I mean, I know the number is not out yet, but likely, when do you see a meaningful lift? We've spoken about this at various points of time over the last year or two, where we are expecting margins to see a lift, but it's not come.
So, Harsh, from my perspective, I think the margins remain at 3.3 or 3.4%. I don't think there has been a meaningful improvement. HDFC Bank is making all the right steps in terms of increasing retail liabilities, increasing retail side of the book where the margins are higher than the corporate side of it. But this has not translated into a margin improvement for the bank per se. Mind you, HDFC Bank is a very large bank and it takes time for a bank with such a big balance sheet to make meaningful changes to their margin profile. But I think there are at least 2 to 4 quarters from here on as well, where we will see very, very slow improvement in margins, where we will first go to 3.5, 3.6, 3.7. But I don't think this is going to happen really very soon. It will be slow and steady. Because of the size of HDFC Bank, it will be hard for them to improve very, very quickly. Having said that, as the management had guided, that loan growth will now start to pick up as the merger woes are now behind them. That should also drive the profitability in the next financial year. So from my perspective, steady improvement in margins together with the improvement in loan growth should drive the company.
Avinash, let me bring you into the conversation. What we've seen is that ROA has been at 1.8 to 2% in that band. Firstly, talk to us about how you're viewing the numbers. Secondly, what are the levers for ROA? Because is this the kind of ROA expectation we can continue to expect HDFC to have? Then the problem is that growth hasn't come in, right? So I'm trying to get a sense as to how you're viewing, one, the numbers and the HDFC Bank story maybe over the medium term.
Yeah, I think numbers have been in line, but as you rightly mentioned, this ROA of 1.8 to 2% is something which the market had already factored in, and I don't think these numbers are anyway excellent or great, which could see a significant amount of re-rating for the HDFC Bank stock. My sense is that our sense was that we were expecting a much better number. The profits, I believe, have gone up by about 11.5%. Our sense is what Q3 was the first quarter where we could see a little bit of bump up in the consumption, spending going up post the GST cuts, plus the rate cuts which have happened. So I think a little disappointing, and I think my sense is we'll like to wait for the management commentary, how the bank management is looking at credit growth in the fourth quarter, what kind of disbursements they are likely to make. And most importantly, typically in terms of the ROE improvement, what kind of new disbursals with new sectors are they planning to disburse? I think the ROA of 1.8 to 2% is something which the markets have already factored in. So on this number, on the face of it, although they appear to be good on a YY basis, I think markets were definitely expecting a slightly. In fact, the Bloomberg poll was showing a slightly higher PAT number. So to that extent, I think we'll have to see whether any provisions have come in. Although on the face of it, it seems that the provisions are down by about 8 or 9%. So, I mean, we'll have to wait and watch for the management commentary to give a clear assessment. But I think the stock is not going to be significantly re-rated post these numbers.
Two arguments, Avinash, with regard to this. One, we've seen a significant a pullback in terms of the stock price in a fairly quick period of time, right? We've seen 12 trading sessions odd, and we've seen the stock price fall by 7%, 7 odd percent in terms of the stock price action from the start of this month and start of this year. We spoke about this before you came in. The second piece is that there is an 800 crore rupee knock which HDFC Bank has taken. This is with regard to the new labor code adjustments which they've had to make. And most analysts, at least within IT, what I realized when I looked at the numbers, most analysts had not penciled this kind of a number in. 800 crore is a large number, and even if I adjust for taxes, that's a 600 crore PAT impact. So ideally, PAT should have been 600 crore higher had it not been for labor code. Do you at all factor that into the equation?
Yeah, I think to a large extent, this adjustment also has impacted the profit growth. The labor code provisioning, I think, which was visible in all the IT companies. So I think, typically now every quarter, the markets and most of the analysts will have to pencil in this kind of growth. But I think net, despite this labor code provision, I think on a very broad level, I think numbers have definitely, come in slightly, on the lower side. I think the number could have been much better if one were to add this 600 crores adjustment to the bottom line. But I think net, I think, what kind of growth momentum the company, the bank management expects in the fourth quarter, because typically October to March is a busy season. And this time there were a lot of expectations that the third quarter ending December could see a very strong revival in credit demand, disbursements, and obviously margins. So we'll have to keep and watch. But yes, the 600 crore adjustment, if it could have not happened, the number would have been slightly better. But yes, still not, as per the expectations of the market.
See the core margin number as well come through. 3.35% is what we're gathering is the core net interest margin. Gaurang, your take with regard to this one-time impact, and do you believe that the street had fully factored it in, given that, of course, you are part of core sell side? I'm trying to understand whether, therefore, if I adjust for this one-time impact of 800 crore, are the profits much better than what one would have expected? 500-600 crore difference?
Definitely, Harsh. And, what I would be interested in the management press conference or verbatim, how much, whether they have taken the large part of this labor code cost of 800 crores or whether this will possibly reflect in the fourth quarter and going forward into the next financial. How much is it? My understanding, Harsh, and I stand to be corrected if I'm wrong, normally whatever we've seen up till now, whether it is IT sector companies, the numbers, Q3 numbers, or whether it is HDFC or likewise others, normally what my understanding is, large part of the impact is taken in one particular quarter and then they phase it out in small parts. So had it not been for this, definitely, 500-600 crores is not a small number, Harsh. It would have been definitely much, much better. But this had to be done. And I think going forward, you will see many more companies doing this kind of adjustment with respect to the new labor code.
Interesting. Aditya Shah, net interest margin 3.35%. I come back with regard to the margin number back to you. How do you assess it?
So steady, nothing, no upside to it, no downside to it as well. They are maintaining it. But as everybody has been discussing, the real regainment of the HDFC Bank stock will only come when they come back to about 4% margin, which I don't see at least for the next 2.5, 3 years happening. So steady set of numbers, nothing to complain about. In fact, I expected very, very steady kind of a number. And more importantly, apart from anything else, asset quality continues to remain extremely robust, which is really a positive. So now, if the asset quality is maintained, the NIM is just an upside trigger for HDFC Bank.
Aditya, your pick among the large cap private sector banks, what's your top pick?
Among the large cap private sector bank, ICICI Bank and HDFC Bank continue to be at par for us. Then we will look at Kotak Bank as well, which has seen a lot of transition. And finally, Federal Bank also reported really very good set of numbers under Manian. They are transforming themselves, and it's a bank to watch out for. And finally, CSB Bank also, they are also continuing to do extremely well. So these are 4-5 private sector banks where we feel good traction is there.
Okay. Gaurang, if I can come to you. The move on Monday, I know you clearly suggested that you will not give short-term guidance, but the move on Monday, and I'm not asking what the move will be, I'm saying what should be warranted. Given this kind of correction we've seen in the stock price, do you therefore believe that there is merit in expecting HDFC Bank to open in the green on Monday? Very likely.
So Harsh, I think first of all, at 9:30, wherever the stock closed on Friday, the downside looks limited because of the kind of correction and the sell-off that we've seen in HDFC Bank. If you got it, hold on to it. If you don't have it, you can possibly start nibbling into the stock on Monday morning and add on dips. But my sense is that somewhere close to about these levels where we have had the Friday closing, you should see the stock possibly bottoming out unless and until you have some large sell-side number from our good friends FIs.
Fantastic. Okay, Avinash, your call on the stock move on Monday, just given the kind of numbers we've seen?
No, I think you'll see a little bit of bump up because, as Gaurang said, the stock has been beaten down. So some amount of uptick could be seen. But I think my sense is that, for a long-term investor, around 900 to 930 is a good price. I think you need to give a fairly long time kind of time frame to actually make money in the stock. In the short term, the stock movement will be very range bound and limited. So I think, it's a good portfolio pick on declines. But I think don't expect any major fireworks on Monday.
Okay. No major fireworks, but green warranted. I think that seems to be the consensus. Avinash, Gorakshakar, Gaurang Shah, Aditya Shah, thank you so much for joining us. It's been really good chatting. Of course,